Africa has been ranked overall first among 20 countries by the ABSA Africa Financial Markets Index in terms of the attractiveness of financial markets. What does that mean? How do we harness South Africa's attractiveness? To discuss, we're joined by George Asante ABSA, Head of Global Markets. Thanks for being with us, George.
Thank you, Francis.
So why... Firstly, what do we mean by financial markets and whether they're attractive or not?
So, firstly, ABSA is a Pan-African bank operating in 10 countries where we have a presence bank, and as a contribution to continental development, ABSA is sponsoring an index that talks about the investor friendliness of financial markets across the continent. And friendliness of financial markets to investors basically means that ease of investors investing or buying stocks on the stock exchange or buying bonds on any platform within financial markets. And the index actually ranks which country makes it very easy for investors to invest if they have excess money. And that is exactly what you said, that South Africa is the country at the top of the index in terms of making it easy for investors to invest.
Is this a plug for the JSE? So most investors from elsewhere in Africa would come into South African companies via the JSE?
Absolutely. So it talks about South African investors trying to invest on the JSE, African investors trying to invest in the JSE, and foreign investors outside Africa also coming to invest in the JSE. And we've seen that that platform is not equal across the continent. So South Africa happens to be a good example across the continent in terms of what ease of investing in these platforms is that other countries can learn from.
We often say that South Africa has deep financial markets. What does that mean?
So, what you will see when you go on the continent is that when you buy an equity on the JSE or the equivalent of the JSE in whichever country that there is, sometimes selling it back when you need cash to be able to do whatever you want to do is not that easy. Now in South Africa it's quite easy, and what the index tries to do is to draw a comparison between South Africa and the other countries and what South Africa has done well or other countries have done well that they can learn from each other, so that as an investor, when I buy something or I want to sell something, it becomes very easy for me to do.
South African, the JSE was lauded in competitiveness reports. One of the things was the oversight, the way we deal with things, but then Steinhoff happened.
So the index itself doesn't deal with specific issues. So the index talks about the
just
infrastructure.
Just in comparison to other African
Absolutely.
countries.
So it talks about the infrastructure, and it talks about the ease of being able to buy on the JSE or its equivalent in any other African country, or to sell onto the platform. And that is really what the index is looking at. So instances of specific occurrences are not really what the index tracks. It tracks the general financial infrastructure across the different African countries.
Is there an irony here? Because investors can come very quickly into our market and move out very quickly. You're saying that makes us attractive. But then we know that that money comes and goes from South Africa. It leaves us vulnerable because we're not talking about fixed direct investment here.
So the truth is that investors come and go, but over time you actually see some stickiness. So it's not like investors come with 100% and then they exit 100%. It never happens in reality. And so really talking about if you are open or liberalized as a financial market, is it a good thing or not? What we've seen across the continent is that almost every country is now following the steps of South Africa, opening up its financial market and making it easy for investors to come into the financial market and exit. Because when you do, there is stickiness, and over time you actually see that you get more funding than you lose. Okay,
so we're onto a good thing. Are there any competitors? We know that lots of interesting things are happening in East Africa, Kenya.
Absolutely. So the index itself has been published for 2 years, and after the first publication in 2017, what we saw was keen competition and countries in East Africa, Kenya, Nigeria, beginning to compete with South Africa in terms of making it easy for investors to invest and disinvest from their market. And seeing the benefits come through. So we've seen significant inflows from investors into Nigeria, for example, and Kenya, because they are beginning to pick some of the best practice from making it easy for financial market participants to participate in the market.
Final question, will we see more African companies want to be listed on the JSE because then they know they can attract investors very quickly? Will this sort of open us up much more?
So we've seen that develop quite quickly, and we're seeing the blocks, whether it's East African bloc or West African bloc or the Southern African bloc, actually beginning to integrate more and more, and we think it's going to continue rather than decline. So South Africa is definitely going to be a place where there is a lot of pool of liquidity and people are going to migrate here. But importantly, more and more African countries are going to work together, because in reality, the financial markets across the continent are small on their own. But when they join together, it can be much more powerful. And we believe that South Africa, as a hub for the continent, really stand a good stead to actually benefit from such consolidation.
All right, so this is a good accolade for the JSE that has been struggling since some of those scandals, and thank you for explaining that so nicely and simply. That was George Asante ABSA, Head of Global Markets.